Now, Zambia's battle with severe drought since the beginning of this year has weighed on food prices. The key driver behind the Southern African nation's July inflation print of 15.4%, up from 15.2% previously and marginally below Absa's estimate of 15.5%. The organization's Sub-Saharan African macroeconomist, Ridle Markus, joins us now with his analysis of this print. Ridle, a pleasure. Good afternoon.
Good afternoon. Good to see you.
Ridle, before we get into Zambia's nitties here, I think maybe alarming at this time when we're speaking about rate cuts throughout the world, it looks like African countries are just kind of on their own inflation trajectory here, and it's moving in the wrong direction.
Absolutely. Funny you mention it. I mean, we just had Nigeria hiking the policy rate by 50 basis points. And you're right. I mean, countries such as Angola, Nigeria, Zambia, they've actually been seeing an increase in policy rates rather than a decrease, as we are seeing in many parts of the world. So it's interesting that, you know, some of these countries have got their own issues, idiosyncratic issues that they are dealing with, but it is bucking the trend a little bit. I think many of our central banks are actually holding out, waiting for the Fed to start cutting before they start cutting policy rates, but not these countries. And also, you know, these are some of the markets where we are seeing social tensions increasing because of the elevated, living costs in these markets. But, you know, I think there's some good news that I think many of these central banks have probably come to probably the peak of the rate hiking cycle. I think in Nigeria's case that we are hoping to see policy rates stay unchanged from here on. Angola, as you saw in the last meeting a week or two ago, they decided not to hike the policy rate, even though there are some risk. And we're certainly hoping that Zambia would follow that sort of expectations of not hiking the policy rate when they sit down again. But unfortunately, yes, the inflation rate is continuing to increase in Zambia.
Yeah, this issue of drought, I think, really playing itself out in sub-Saharan Africa. And I think Zambia, of course, a big part of it. Let's speak about what we are seeing there in terms of food price inflation.
Yeah, so food price inflation came in at 17.4% in July. Certainly very, very high and obvious concern. They had some relief in transport prices, or at least fuel prices falling at the beginning of the month. But I think with the currency having weakened further this month, there is a risk that fuel prices could potentially be hiked again. The currency is so far this month alone, since the beginning of the month, is down 8% against the US dollar, and it could even weaken further. So while there is, food price pressures on the one side, the issues are certainly, the concern for us is certainly that fuel prices could increase again, and that would also feed into transport of food, etc. And so the second round impact of that start to come through. We believe that inflation could potentially peak in the current quarter, but that really depends on the drought and how long the drought will continue. The bad news is, of course, is just before this interview, I had a look at Lake Kariba dam levels, and the unfortunate reality is that up to yesterday, dam levels, water levels have continued to fall, and it is now at 10.63%, well down from the 30% it was a year ago. So that is certainly not good news. I was hoping that there would be some increase to give us some hope that the water coming into the dam, the water levels are starting to improve, but unfortunately that is not the case. So for the next few months, I believe that the drought will continue to impact on the economy, on the electricity supply to the nation. So it's really, it's going to be still a challenging next few months for Zambia overall.
Also interesting, I think, at this point also is that, of course, these dam levels complicating the power issues. So not only is there a need to import food, but also a need to import electricity.
Absolutely. So it's not just, as you rightfully mentioned, it's not just the need for grain imports. It's also the fact that mines have been asked to reduce power supply. But Government has also been talking to the mines, given the importance of the copper industry to the nation and the need to sustain production. They've asked mines to rather resort to diesel generators and import more diesel, and of course then also electricity being imported from Mozambique. The problem with that is it puts the current account under pressure and it puts the currency under pressure. So there is no short-term relief for the currency, unfortunately, here until the water levels start to improve. More electricity is being produced. That will relieve, provide some relief to the mines that they don't need to import so much diesel, for example. So yeah, electricity disruptions are up to 12 hours a day. So economic activity generally is under severe strain. And that's why the economy just in the first quarter of the year grew by 2.2% only. And I believe that in the second quarter, it could potentially be even worse than that. So it's really challenging at times for Zambia.
Of course, I think you touched on it earlier, but I'm just looking to get some in-depth thoughts around then the response by the Bank of Zambia here, really using interest rates. It's the only tool we have seen around the world, and I think very similar to what Zambia will have to adopt.
Well, they have already increased the cash reserve requirement for commercial banks by 1,450 basis points, which is very steep. And they have hiked the policy rate so far this year by, I believe, 250 basis points. I don't see them hiking at the next meeting, but it really depends what the currency is going to do over the next 2 weeks. The next meeting is scheduled for the 12th to the 13th of August. If the currency continues to weaken, I think, and fuel prices, we haven't seen an announcement around fuel prices from the regulatory authority, but if they decide to hike fuel prices more for August, from the beginning of August, then I think there's an increased risk here of at least a further hike in the policy rates. We've seen in the most recent report from the IMF released in June that the IMF is recommending that they maintain the tightening of monetary policy. So it's very likely that Zambia will heed to that call and hike again. But we remain hopeful that the currency won't weaken further and that policy rates, or at least that the central bank will see also what we are seeing, and that is that the inflation rate is close to a peak, and therefore, that there is probably no need to hike the policy rate. Fingers crossed for Zambia.
And of course, you also touched on growth prospects here. You are expecting, growth to come in a bit lower. What number are we looking at here, Ridle?
Well, sadly, after growing around 5% last year, well above 5%, Zambia is probably on track to grow about 2% this year. Our official number is 1.9%, but I think general consensus is around 2%. So it's not a great year for Zambia for the reasons I've just explained, the drought at the center of it. But I maintain my view that the medium-term outlook for Zambia looks much more, promising, and that we think that Zambia could actually grow around 6% next year, which is actually in line with the IMF. I think there's going to be a fairly quick rebound in agriculture output and mining output once electricity issues are resolved, and that should see growth rebound quite strongly in 2025.
Well, looking forward to getting more analysis from you, Ridle. Thank you so much for your time this afternoon. That was Sub-Saharan African macroeconomist at Absa CIB, Ridle Markus.